Hi, everyone. Welcome to the Future of Finance podcast, where we break down investment strategies to help you live a better financial future. I'm your host, Marissa Wood, financial advisor and one of the owners of Union Financial Services. And today I'm joined by Chris Wood and Dee Costa from Asset Marketing Systems. And we have a fun episode ahead where we're going to talk money and marriage. You'll get 3 different perspectives on money strategies that have worked and some that you might want to avoid. So if you're married, engaged, dating seriously, or even recently healing from a loss, this episode will give you some insight that spreadsheets just can't provide. Now, before we get started, I'd ask you to please subscribe to our channel. It really does help us to continue putting out content. Well, Chris and Dee, welcome back to the show. Thank you for being here today. I want to ask you first, how long, Chris, were you and Penny married? And Dee, how long were you and Ed married for?
43 years.
Wow. A long, beautiful marriage. And
Yeah.
Chris, how long have you and Penny been married?
We're going to celebrate our 8th anniversary this April.
Okay. And I've personally been married almost 4 years at this point. So 3 different perspectives from different points in life, different points in marriage. And I'm sure there's some things that we all do similar that have worked. And I'm sure that we all have some things that we might not recommend for other people to do inside their marriage with finances. Of course, there are some financial benefits to being married. Can you share some of those with me, Dee?
Well, I think there's some very obvious benefits. Number one is taxes.
Mm-hmm.
Married filing jointly. Now that I can't do it anymore, I certainly appreciate the benefits of the tax implications of being married.
Mm-hmm.
Big deal. Joint goals, sharing a vision together of your future and building towards it, to me, created a very fulfilling life all the years that I was married, both of us contributing and whatnot. So the other advantage, benefit, niceties of being married is if one person, my husband was a commercial tuna fisherman, and when the industry left San Diego and moved out of the country, obviously he had to rethink his career. And what do you put on a resume when you've been fishing for 15 years?
Mm-hmm.
So it took him a while to establish himself. It was nice that at that point in my life, my career had taken off and I was able to fill the gap with my income. So, having times where you support one another through periods, unforeseen periods like that is definitely a benefit.
It truly is a partnership. The odds that both people are going to be making the same income as each other are slim to none.
Right.
There's going to be periods of time where one spouse makes more than the other. Maybe one spouse can't work or wants to step aside to raise a family. And it's supposed to be a union.
Mm-hmm.
It's not a competition, I think.
That's right.
Now, Chris, did you and Penny have any financial conversations before even getting married?
I think we did. It's obviously been a little while, 8 years in. I'm trying to remember back, but luckily I'm fortunate. She's very financially savvy and money conscious. We actually have a monthly meeting, and we'll get into that. But previous to, I think it was pretty clear. Neither of us really had any major debts. I think the only debt she has outside of our mortgages are her student loans, which is what it is.
Yep.
But yeah, neither of us were swamped with any commercial or credit card debt. So I think because we were kind of equal in that regard, it was pretty easy. We trusted each other knowing like, okay, we're pretty financially savvy. We both have pretty decent credit scores. We're good at managing a budget. The sad and truth, she'll appreciate me sharing this, is that when we met, she was actually she's a chiropractor by trade, and she was finishing getting her doctorate and had more in her savings account than me, who was at the time, a 12-year veteran, 12-year police department member of the police department in Dallas. And I made obviously pretty decent money comparatively, and I had no savings. So I was kind of the epitome. I had a great credit score, always paid my bills. So I was financially savvy and good. But she loves to rub my nose in the fact that she was a wee college student, a graduate student nonetheless, doctorate student nonetheless, and had more savings than I did. So I guess at the end of the day, and she's awesome. And so I'm very fortunate she's a saver and I'm a little more of a spender. and I'll get into more of that. But yeah, we knew we were pretty much on the same page, and I really quickly remedied that situation. Once we started getting serious, I worked a lot of overtime, saved a bunch of money, and caught up to her. And
The
and then
competition.
I surpassed her.
Yeah,
We
I mean,
make it a
sometimes
fun.
it can be good to have a little competition. I mean, I
Yeah.
know my husband and I, of course, he actually became a client even before we were married. Had been dating and we were engaged and everything, but he gets so excited now to invest, not just because I'm his financial advisor, of course, but he likes to set goals and then he likes to compare, all right, well, I have this amount in my IRA now. What are you at now? And let's both try to get it to this amount by the end of the year. And I think a little healthy competition can be fine.
Yeah, now thinking back, it's coming back. I think I had credit card debt at the same time too. Again, it wasn't like super terrible, and I won't get into why. There was some excuses. Nonetheless, I had it, so I worked
Yeah.
really hard to pay it off. And then we had a competition over credit score, and I'm winning that one right now, just
Mm,
by a
there
little
you
bit.
go. Now, Dee, talk to me a little bit about keeping finances separate versus combining. Now, you had mentioned that you and Ed did combine finances quite early on because he was a commercial fisherman and you
I
know,
needed to pay the bills.
exactly, exactly. And how had that worked in your marriage versus maybe sometimes you're seeing, and I know I've seen this as well, that it's a bit of a trend keeping finances separate these days. What have you seen with that?
So I'll be very direct with you and use my own son as an example. Hopefully, he doesn't take offense to this, but it is what it is. It's just the truth. Because he was born and raised, and both my husband and my husband went into car finance after fishing. So he was Chris talks about credit scores. We were very diligent about always maintaining a very good credit score, paying off our credit cards at the end of the month, going without if it meant saving our credit scores. And so my son grew up in that environment. And so he became a saver. He became very conscious at a very young age, bought a car at a very young age, of how important a credit score is. And he got married in 2018. So he's been married about 8 years, about the
Mhm.
same as Chris. And I adore his wife. She's adorable. She's a spender, he's a saver, and they keep their finances separate. And I don't get it. I think it's very strange. Now,
Mhm.
they do have a joint savings account where they both contribute on a monthly basis, and that's for their annual vacation. They're going on a
Okay.
cruise next month. So they've got shared goals in that sense. They've got that in common, but they divide up the bills. One pays the house payment, the other pays for food and child care and school, and they
Mhm.
just even out the bills and pay for them separately. Um,
That seems very common these days
I
from
think
what I've
it's
seen with
I
clients.
think it's way more common than
Mhm.
I, I
Why do you think that is?
you know, I asked my son directly because I told him I thought it was strange, and he
Mhm.
said, "Mom, you don't want to know what her credit score is." She likes to
Okay.
keep a little balance on those credit cards.
Mhm.
She's a great gal. She loves to shop. She makes very good money. She's a high
Mhm.
level administrator, has her master's degree in hospital administration. She does
Mm.
very, very well, but she doesn't think twice about spending.
Mhm.
And so, and it's not that she doesn't pay her bills, but she allows her, interest rates to get high, and it just affects your credit rate.
Mhm.
And Dean doesn't want any part of that. So
Okay.
he wants to keep his credit score nice and high. And
Okay.
they have a beautiful marriage. I know that Chris knows somebody in a very similar situation that it didn't work out so well to keep their finances separate.
Tell me
Yeah.
about that.
Yeah, I just personal observation. I could just tell that there was always dissension because it was kind of a keeping score thing. I think the irony is we just discussed like how we made it almost a fun competition is the important part, right? Where it can get toxic or problematic, I think, is where you have a competition like, well, I paid for this and you paid for that, or this bill was bigger, and then you get this back and forth, and then you're not, like you said, you're against each other. You're opponents, not a union, rowing the boat in the same direction for the same goal at the end of the day. So yeah, if you're gonna have I just think my personal opinion, I understand it's traditional to have joint accounts, and my wife and I do, and I guess I'll talk about that here in a minute. But there's just more opportunity for competition, and competition means there's more opportunity for conflict and fights. And I think that's the ultimate thing. One of the major driving factors to divorce is money issues, and obviously goes without saying, right? So I saw it firsthand, and those folks are no longer married, and it's unfortunate. And I was always just of the opinion that if you guys combined your accounts and, you know, just put everything in the pool and you work together, then you don't have this tit for tat. Completely removes that. But one thing, this is a recurring thing that I always say in finance, is whatever works for you. Like I hope I don't want to sit here and say that you should emulate me or her or whoever.
Right.
I really think it's important in a marriage that you two, whoever, you sit down and you come up with a plan that you both agree with.
Yeah. I mean, I think that keeping money separate would become a challenge when maybe one person is not working for a period of time. And then how do they pay their part of the bills? Or do they have spending money? And do they have to ask their spouse for money? It gets tricky at that point. And I've found, at least what has worked with a lot of my clients, is having that joint account where all the paychecks go into, all the bills come out of. And then if you each want to have your own savings account on the side for fun things, not that you're keeping it a secret, but for a little bit of autonomy,
Yeah,
then that might work.
that makes great sense.
Rather than two totally separate accounts and Venmoing each other half the water bill. I don't love hearing that when I when I hear it, because it feels like it's not a union at that point. Of course, every marriage is different, but yeah, it's an interesting thing that the trend is separate finances, and I think there is a way to have some separate but majority combined.
Yeah, and I think you were talking about the income issues, right? Job changes, and maybe you have a job that's sales based, right? So your income isn't consistent. And I just think it's important to look at each other and always remember that this is a union, like you said, and that and perfect branding too, because
I know.
but at the end of the day, I think the bigger thing to remember is the goal is that you're together, and whether I'm making more, she's making more. In our marriage, in the 8 years we've had that, she supported me when I left law enforcement and moved into this financial industry. So obviously there was a big change there, and she shouldered the stability. We've actually, it's interesting because then she started her business and I had the job with the state government, and so I provided the stability. At the end of the day, we leaned on each other when we needed to, and we made decisions based on assuming you could, like obviously layoffs and things happen. But we made decisions on where we were going to go, what we were going to do based on who had the stability and who could take the risk. So when she started her business, I had the stability and vice versa. That's a major thing. And then as it relates to joint accounts and spending, what we do is all of our we have joint everything. All of our money goes into one account. All the bills come out. But what we do on the 10th of every month, coming up here soon, we meet and take our temperature. We look exactly where our checking and savings accounts are. We see did they grow or did they go down? And then what we also do is we take an excess and we put it in our own spending account. So we earmark funds from our excess. So I get 1,000, she gets 1,000. And the why we do that is it removes absolute any opportunity to argue or have resentment because I went and got new golf clubs, but she went and got her nails done and bought a purse or did whatever, or whatever the case may be.
That's great.
That's a great idea.
That's how we do. Everything is a team, but we have our separate spending accounts. Because again, I'm more of I like to go out to eat here and there, like go grab, a sandwich for lunch as opposed to making peanut butter and jelly, where she will literally not spend $1. And in August, she's going to Paris by herself.
Yeah. And that'll be an expensive week.
That's an expensive week.
But she earned it.
But
She earned it, and
yeah.
she saved, and I can't be over here going, you're going to go spend a couple $1,000s going to Paris, because I'm going to get golf club. And so it's is it a tit for tat in a sense? Yes, but it's from a fairness perspective, right? And she doesn't want to resent me because I'm over here spending money every day and she's saving.
And by doing that, it's brilliant because neither one of you has to justify what you're using your fun money for. If it's fishing, if it's golfing, if she wants to go get a facial, it doesn't matter.
No, in fact,
because we each have our own hobbies that we want to support, and they do cost money sometimes.
I
and it's
think
the
that's a
opposite.
great strategy. I
Yeah.
Yeah.
absolutely love it.
We actually encourage like she's like I want to go to I'm like I don't really want to it's crazy. I know people judge us and that's the other thing too is I think don't worry about judgment, right? There's a traditional way of doing things. There's the way that your son and his wife do things, and there's the way we do things. You just find what's best for you that makes sense. And our goal was to just remove the opportunity to have a fight over money. And my wife and I, in anticipation of me coming down here, we like kind of reminisced and we look back and she's like, yeah, I don't, maybe early on at first in Hawaii, because we were broke and then
Yeah.
Maui's a little expensive. We had a little bit, but once we figured it out, man, money is, if anything, it's kind of fun. Like we sit down, we have that monthly meeting. Are we ahead? Are we behind? Oh, we're doing okay. And also life happens, right? As long as we stay within the fairness parameters, I have 1,000, she has 1,000, and I go off and spend two. That's an issue, goes without saying. But sometimes we have to tighten our belt. And really, one nice thing I think is we're both subscribed to my wife and I both are very big on delayed gratification. Like if we can't afford it, you just go without it. We aren't the people. I mean, when we lived in Maui, Hawaii, we didn't go back for a funeral for some of our family members because we just didn't want to put them on massive credit card debt. It was incredibly expensive. And those are choices you have to make. Everybody's different, but
That's great. Thank you for sharing that, Chris. Now, Dee, what have been some of the amazing decisions you and Ed have made as a couple together? And maybe what was a financial hurdle that you faced?
So, yeah, life is not a smooth road, that's for sure. Um, I think, a couple of things, really big purchases like homes. Um, I'm so grateful that my husband, as a commercial fisherman, made really great money when he was younger in life. And so we were able, fortunately, at a super young age to buy our first home. And that was all because of him. But at some point, we decided to add a family. And about 3 years into our marriage, it was a tiny little home, but it was our starter home. And it had appreciated quite a bit in value. And so we knew once I got pregnant that we were going to need more room. So it was an exciting time. It was a very challenging time to agree on a house together and a neighborhood together. We looked for good school systems and whatnot. Um, and knowing that I was going to take some time off work, we needed to make sure we could afford what we were doing. So anyway, we bought our house in 1985, and it, so it was a big financial decision, and then shortly thereafter, the fishing industry went kaput. And within a year, I had an unemployed husband looking for a job with fishing on his resume,
And a newborn baby?
and a newborn baby.
Wow.
So it was a fairly stressful time. We were literally unable to save a dime. We were living my paycheck to paycheck, struggling to survive. And fortunately, Ed got into car sales. He was a natural salesman and eventually into finance. And, things turned themselves around. He started contributing more and we got through that rough hurdle. Thank God our love was strong and it didn't break us. And we found ways to make it work. But then on my husband's 43rd birthday, we were actually doing quite well at the time. He had a massive heart attack and a quadruple bypass and was off work for months and months and months and months. And so once again, that paycheck stopped. I was able to step in. It's kind of like you're talking about supporting one another when things happen. But then, heading into our late 40s, early 50s, we both realized we've got to get serious about retirement planning. It was, you know, it doesn't seem like a very short leap from 35, 40 years old to all of a sudden you're mid 50s and retirement's 10 years out. And it's like, oh, we've really got to get serious. And so we sat down and decided we've got to significantly increase what we're setting aside for that. We knew my husband had health issues. We had to be prepared for that. So there were risks that happened along the way that opened our eyes to the bumps in the road, the rainy days, and you just can't be over prepared for them. So,
And did you have those conversations together about preparing for worst case scenario? Is there things that you would have done differently, or do you feel like you did plan appropriately?
we did. My husband liked to spend money more than I did. I just being in this industry, I understood how important it was to have, 6 to 12 months of income in the bank always, and to have a portion of my savings going to 401k and investing and so forth and so on. And Ed would see a shiny new Lexus and get pretty excited even, in his older age. But we always made joint decisions. He never went off and did anything without, us sitting down and making sure that we could afford to do it. So we were both diligently putting money away towards, that goal of eventually retiring together. And he didn't quite make it to retirement, but he left me in really good shape. And I just thank God every day that that we had that vision together, that we planned together, and we did plan for that worst case scenario. And so he left me in good financial shape.
Yeah, and I am sorry that he's not here
He was
to
fine.
see
I know.
the rewards of what you guys worked so hard to save. But yeah, part of that was him leaving a legacy of making sure that you were okay
That's right.
and planning appropriately, because it's not just about who's the saver and who's the spender right now. It's okay, what if something happens to one of us?
That's right.
Do both parties understand the financial plan? Do both parties understand what the bills are, where the investments are, where the income's going to come from if one spouse loses their income from
Right.
disability or death
Right.
or an injury? So it's so much more than just a monthly budget. Of
That's
course,
right.
that's the starting point, but it is so much more than that. And I have found that when it comes to having one be more of a saver and one that's more of a spender, which I think actually every marriage needs, because if not, then,
Kind of
if they're,
boring.
they're going to be broke or really bored. So you kind of do need the balance. But I think having an advisor in the relationship to review the budget, to review the financial plan, it's that neutral third party that's not going to say, why did you spend that on shopping on Amazon last month? It's okay, you spent more than the budget. What are we doing next month to get back on track?
Right.
I think that can help marriages, just having that advisor even being present.
Absolutely. As Chris said, financial issues can be the biggest cause of divorce, and having someone in your corner that can pat you on the back when you're doing great and get you back on track when you get off track and be very neutral about it and yet supporting is an awesome, awesome tool. Yeah.
Yeah, Chris, what are some other hurdles you've faced or things that you've seen clients go through, and advice that you'd give to someone experiencing something similar right now?
Yeah, our personal story, I mentioned we moved to Hawaii, Maui. Obviously, that was pretty challenging just from a financial perspective, just the logistics of moving, the cost. I mean, heck, it cost more to send our dogs. We had two large dogs. Those were like, I think, $1,500 a person or a dog. It was more than
Wow.
our
Oh
flights were.
my.
So, $3,000 just to get our puppies out there, and that's a big financial burden. And we weren't making six figures at this time in our life. She was just out of college. It was actually her first job, second job as a chiropractor. Contrary to popular belief, they don't make a ton of money coming right out of school. So that was a hurdle because we're in a new relationship, moving literally to an island in the middle of the Pacific Ocean, and we're on our own, right? Everyone laughed at us. Everyone, again, kind of the judgment, like there's no way this is going to work. I left law enforcement. Yeah, so that was a hurdle. And I think, life changes, impact your finances just as much as financial changes can impact a loss of a job or whatever. But decisions that you make together are very have that opportunity. Then to continue down the path, in 2020, we decided to move from Maui to San Diego. If we all remember the year I don't like to even speak about, we landed in in San Diego, February 12th of 2020. My wife opened her first brick and mortar business on her own March 1st of 2020.
Oh,
I was going to be a life insurance independent broker, and which obviously necessitated in-person meetings, and we all remember where that went. So this poor girl opened up her business and literally, I think, got to see 3 patients and had to close her doors. I obviously couldn't buy leads and run leads and go meet with potential clients. That was just a no-go. So I had to pivot and ended up selling insurance over the phone, one call close, like, and we had a downtown apartment, a $2,000 month of rent to meet, among other bills, and so that was quite the hurdle. Um, you just become resilient. You lock arms and you figure out a way to make it work. Obviously, spending had to be reeled in, and we couldn't really go anywhere or do anything. But you still eat and you still want to splurge to whatever you could. So for us, like going to get pizza was a treat, right? So that was our biggest hurdle is, big life changes and decisions. And then obviously things like COVID that come in and just completely throw a wrench into your plan. How do you react? I think that just lends to looking at this as it shouldn't be a competition. It can be stressful, quite certainly, but it can only be made better by locking arms and tackling the problems together and looking at how can we get through this storm together, because it's not forever. It's not a forever life sentence. We're in a completely different scenario now. Of course, we're thankfully 6 years removed from that horrible year, but life
Feels
goes
like
on.
yesterday,
It
doesn't it?
does.
But I know known you for a while now, Chris, and I feel like your character was really carved out in that storm. It's only through the storms in life that we develop that resilience and that persistence and that determination. And having a partner that can help you navigate those rocky waters and land to shore on the other side and come out as wonderfully as you have. I mean, it's kind of cool to see. I don't think there's a couple that ever doesn't go through tough times. It's how you navigate through them. And I think it's amazing to be able to have a coach to help you navigate those rocky waters too.
Absolutely. Yeah, lean on other people, whether it be your financial advisor, tax accountants, family, your faith, if that's important to you. And it all does tie in to having that healthy marriage. And it's funny, it's a lot of it is based on money, but when your finances are good and you're sticking to the budget and you're automatically investing every month, money shouldn't really be at the forefront. It should be just happening in the background and little tweaks here and there. Um, Now, Dee, what are a couple tips that you have to make sure that people are prepared in the event of a loss like you experienced?
Well, there's always the obvious. I'm grateful that I was a life insurance salesperson before I was actually a full financial planner. So I've got a huge belief in life insurance. And it came in handy in a couple of different ways. When my husband had his heart attack, I actually had a cash value life insurance policy that we were able to borrow money from to keep us going until he got back on his feet and back to work. That was a godsend. When you're unemployed, it's really hard to get a loan. You know, it's hard to get money from a bank. So being able to tap into your own source of it, we never anticipated needing it, but it was there when we did. And so that literally built a bridge for us back to financial health. And then, obviously when he passed away, there was a tax-free death benefit to me. We also, there's a lot of planning that can be done with a financial advisor I'm obviously older, as you get closer to retirement, setting up accounts. And one of the nice things is that spousal IRAs, you can transition that to the surviving spouse and so forth. So I would just say, first of all, if you're in an occupation, and this can be kind of tricky, but an occupation that can be hazardous to your health, think about disability insurance for sure, because that'll keep a paycheck coming in if you got hurt on the job and couldn't work for a while. life insurance is just a must. I'm sorry, but it is, and I mean, worst case scenario, term is great. We've talked about this before. Something is better than nothing. But if at all possible, have some cash value life insurance. It's amazing to see that thing grow and be there when you need it most.
I agree. Yeah. And, having those beneficiary designations and estate plan are also very important. Having each other's passwords on important things and
Mm-hmm.
maybe kept in the safe is also important. And just having the open communication too, I think. You don't want to bury your head in the sand and say, well, they're just a spender and
No.
we can't do it together.
We'll deal with it if it happens.
Yeah. Yeah, that's not a good plan. Now, one last question for each of you. What would be one financial habit that you think every couple should implement within the next, we'll call it 30 days?
I can start. I think my wife will argue and say I don't enjoy it. But we, like I mentioned before, we have a monthly financial meeting. That's literally what she's like. You ready for a financial meeting? Here's a fun way to make it a couple things. One, it doesn't have to just be a financial meeting at home. You can go do it at a bar or a restaurant or wherever. You can make it a date night and you bring your laptop or go to a coffee shop or make it fun somehow to where. And you change your mindset, right? We're not auditing to see, oh my gosh, you spent this or you did that. It's just an honest diagnosis of where are we? Where are we at? Because I hate, there are all these little sayings and they exist for a reason. That is not measured cannot improve, or that is measured can improve, right? Like you could be, if you're going to go work out every day, obviously you're going to notice the changes if you do it consistently. So if you measure where you're at each month and you don't look at it from an accusatory standpoint, again, you got to eliminate that tit for tat or the urge to, if things go off track. Because the important part is you're off track if you are, and you each month just row the boat together. And it's a silly analogy, but I mean, at the end of the day, I think that's important because it helps with the unity of shared goals, make adjustments if necessary. But if you just live through life and you have no idea what you're spending, you're struggling to make ends meet at the end of each month, it's probably because you have no idea, even like subscription, there's like apps out there, right? Where oh my gosh, I figured out I'm wasting $400 on subscriptions I don't use. It's things like that. We literally go through our bills. We make sure that everything's on the up and up. We're not getting, fraudulent
fraud.
charges,
Yeah,
which I had one
happens.
recently. I literally had something where I must have signed up for something and I had a $500 charge on my credit card that was like a free trial that like after a year reverted to a paid membership. And I was like, what on earth is this? I don't even remember it. I called, luckily, no big deal. But that's a good point, right? And so that's why we do that meeting. We try to, if we are in the mood, we make it fun. But we're to the point now where it's just habit. And on the 10th of every month, we pick the 10th because of how she gets paid. So, and we do it on the same day. So we have continuity. She's a spreadsheet person. Thank God Excel makes my head hurt. She's got it all figured out. We know exactly what our excess is each month or lack of. Maybe you don't, right? But you need to know where you're at. If you don't, then how do you make a plan? How do you get better? And how do you improve your overall situation if you have no clue what your monthly expenses are and what you have left over?
And for those of you that don't have a budget, we can provide that to you. All you have to do is go to our website, union-financial.com, click schedule a meeting, or send us an email, and we'd be happy to send you our template. Of course, you can customize it to fit your own household, but it's a good starting point. Absolutely, Chris. Dee, anything to
So
add?
so this is going to sound a little strange, and I'll make it kind of quick, is even though I'm in the financial services business, we elected to employ a third party, unbiased person to help us put together a financial plan for the future. And I really like the monthly meetings. I think that's super healthy. My husband really didn't want to know that much. And I think in a marriage, sometimes one spouse is more educated than the other, which is why I decided to bring in a third party, just so that he was made aware of where we stood, in relation to our goals, in relation to our savings, in our retirement planning and all of that. But he let me kind of do the work after that. And I think with any marriage, I would, even though there may be one person who manages the money, oftentimes it's the female, is the CFO of the household. It's really important that both people sit down with someone and understand the entire plan, because you don't know which one of us could get hit by a car tomorrow. So you can't just brush it off and give it to one spouse to worry about. As generous and loving and trusting as you may be with your spouse, that spouse could be gone in a heartbeat. So I would just suggest everyone sit down with your spouse, with a professional, lay the cards out. It doesn't matter which of the two people manage the money. Know what's going on.
I agree. Yeah. I mean, money in marriage is not about perfection. It's about partnership, and whether you're 1 year in, 5 years in, 10, 30, 40, or walking through loss, those financial conversations do matter, because one day you'll either be grateful you had them or wishing that you did.
Right.
And so if this episode sparked something for you, don't wait. Schedule that money conversation with your spouse and do it with an advisor too. All you have to do is head to our website, union-financial.com, click schedule a meeting, where you can book a phone call, Zoom call, or in-person meeting, always complimentary. And if you enjoyed this episode, please like it, subscribe, share with a friend or family member. Doing so really does help us. Dee and Chris, thank you so much for sharing not just these strategies, but personal life experience. I really appreciate it, and I'm sure our listeners do as well.
Thank you, Marissa.
Thank
Happy
you.
to do so.
And for everyone else, thank you for tuning in to another episode of the Future of Finance podcast. I'm your host, Marissa Wood. We look forward to helping you live a better financial future. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Union Financial Services are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. The opinions expressed by Marissa Wood and guests on this show are their own and do not reflect the opinions of this radio station. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risk and otherwise stated are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor to determine if it's suitable for your specific situation. This program is designed to provide accurate and authoritative information with regard to subject covered. Index or fixed index annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charge as described in the annuity contract. Guarantees are backed by the financial strength and claims paying ability of the insurer. Please refer to our firm brochure, the ADV 2A Item 4, for additional information. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone.